Okay, we are live now. Okay, Carrie.
Hi guys, this is Caroline with Austin 101. I have my broker Doreen here, and we are going to be interviewing Nick Pronsky with Legacy Mutual Mortgage, and we are going to be discussing some options that are available to homeowners who may be coming into some issues with either less income or a complete loss of income due to the COVID outbreak. So Nick, if you want to introduce yourself, a little bit about yourself and your company.
Yeah, hi, my name is Nick Pronsky. I work with Legacy Mutual Mortgage. I'm a mortgage loan originator for them. I've been in the business for about 15 years. Legacy Mutual Mortgage is headquartered out of San Antonio, Texas, and we have offices in 3 different states and pretty much every major city here in Texas. But yeah, like I said, I've been in the industry for about 15 years. So unfortunately, this is the second major downturn that I've personally witnessed. And obviously, this one's pretty unprecedented with the amount of unemployment we're seeing, people losing their jobs, being laid off or furloughed. And so it's having some pretty massive effects on the mortgage industry and the way we do things. So I'm glad I could join you guys to talk about it today.
Mm-hmm. So what type of things right off the bat would be available to people who are kind of coming into those issues?
Well, it depends. Are you talking about people who are looking to buy a home or people that already own their home?
Already own their home.
So the ones that already own their home, there's the stimulus bill was passed recently, and this is a pretty interesting topic right now because I don't think they did a very good job explaining the true ins and outs of what it means. So one of the parts of the stimulus package was the ability for homeowners to skip mortgage payments, basically, is the way they phrased it, and they could get what it truly is a forbearance agreement. So
we're not live.
Oh.
It says live.
The internet. What? Keep going. We are live. Okay, keep going.
Yeah. So if the client, if someone already owns a home, the stimulus bill gave them the ability to reach out to their loan servicer. So they have to reach out to the bank that services their loan and apply for what's called a forbearance agreement. And there are options available to where homeowners can skip 3, 6, or in some cases even 12 months of mortgage payments.
Oh, okay.
That sounds great on the surface, but what people don't realize and what really needs to be brought to a lot of people's attention is that this is a forbearance agreement. This is not forgiveness, and it is not deferred.
Oh.
Yeah.
So what that means is,
people need to pay back.
Yeah, exactly. So for, as an example, let's say you get a 3-month forbearance. At the end of that 3 months, you now owe 4 mortgage payments because you owe the month that's due and the 3 months that you skipped. So for a lot of people, it gives you some short-term reprieve from those mortgage payments to where you don't have to make them for 3 months, but then it's owed. And so if you can't make them all at that particular point, you have to reach out to your servicer again, and they may be willing to spread that amount that you missed over perhaps 12 months. But that's a much higher mortgage payment than you were used to making originally. So that could be a problem for some homeowners too. Mm-hmm. And then past that, who knows what's going to happen. It could be like 2008, 9, and 10 when you saw a lot of loan modifications, and that can be really harmful to people's credit. And it could go as far as missed payments and potentially foreclosure proceedings. So it's a pretty I think there needs to be a lot more information out there that's a lot more clear, because I field a lot of phone calls from clients who think that they can essentially skip 3 payments. Mm-hmm. Or skip 3 payments and then they get moved to the end of the loan, which that's not necessarily the case. So my best advice to any homeowner who's interested in that, first of all, it should be treated as an absolute last resort. In other words, if you are unable at all to make that payment. And second of all, be sure to read that fine print and know what your servicer is going to require once that 3, 6, or 12-month period is actually over.
Right. Yeah, absolutely.
Mm-hmm.
I have heard.
I heard about some programs. Okay, I'm sorry, Carrie.
No, yeah, I've heard some programs available, and I've heard a lot of people discussing refinance at this point too. Would that be an option for some people?
Absolutely. I mean, especially here locally in the Austin market, most homeowners have a good amount of equity in interest rates on conventional loans are near the lowest they've ever been. So that's absolutely one of the conversations I'm having with my clients right now, is telling them, as opposed to a forbearance, why not look into a refinance? Because with a refinance, depending on the time of the month you close, you can skip either 1 or 2 mortgage payments. So that alone is a huge benefit for people right now, let alone the drop in your interest rate, the drop in your monthly payment. Perhaps you can drop the term of your loan and shorten it to maybe 15 or 20 years. So there's a lot of good options out there as far as refinancing goes, and some added benefits. Like I mentioned, you can skip a payment or 2. You usually get a refund of what's ever in your escrow account already. So all that money you've paid in for taxes and insurance gets refunded to you. So a lot of people are using a refinance right now to skip a couple payments, get a little extra cash in their pocket, and give some breathing room as they navigate these uncharted waters here of COVID-19.
Yeah, sure. Doreen, did you have anything to tag on to that? I think she's gone.
You frozen there?
Okay, so the or how does it take
How long does it take?
for current situation, right?
I think you're breaking up a little bit there.
Yeah, I heard how
Right.
long does it take? Or
And what's the
Was she talking about like costs and benefits of refinancing?
yeah, I would say so.
time frame?
Cost too is something that we can talk about too for refinance as well.
Yeah, and yeah, so I think that's an important exercise with refinancing. I think that's the best part about refinancing, is it's a very logical decision. It's not like buying a home that can be emotional and have a lot more tied to it. With refinancing, you take the costs of the loan and you look at the benefits, and then you conduct what I call a break-even analysis. So as an example, if there are $4,000 in closing costs for a refinance, but you're saving $200 a month, 4,000 divided by 200 is 20 months. That's your break-even point. So it's a very black and white decision for a homeowner. You can say, are you going to own this home for more than 20 months? If they think they're going to live in the house for more than 2 years, then they will save money by refinancing. But if they think they're going to sell next year, then I would advise them not to refinance, because they won't be in it long enough to recover the closing costs that were associated with that refinance.
Absolutely. And I guess another thing is that people are concerned about being qualified to get loans for purchasing. So what are your thoughts on home buyers during this crisis?
Yeah, I mean, we're still seeing quite a bit of activity on the purchase side. The biggest hurdle, obviously, is employment and verifying income. Sadly, we've seen a lot of people that were either laid off or furloughed from their job or position, resulting in a loss of income. So, the idea is we have to verify employment at the pre-approval stage, during underwriting. And now, as of recently, we actually verify employment the day the loan funds. We actually have to call the employer the morning of closing, make sure that that client is still full-time employed, no changes in income, no reduction in pay, anything like that, so that we can make sure that the terms of the loan are exactly what we underwrote. So it's definitely scrutinized a lot heavier than usual, which was already a lot. So we're taking a pretty deep look into that because banks and servicers, the people who provide these mortgages, they have to make sure that the client who's taken it out does have the ability to repay. A lot of servicers out there are kind of nervous right now because of these layoffs that people are going to start missing mortgage payments, and that could lead to them losing money. So there's definitely some added guidelines to ensure that the client has the ability to repay.
Okay. And I also did have quite a few general FAQ questions for refinance. If we want to kind of touch base on that, because I know people were curious. Let me pull it up. Let's see. So, and you kind of touched on some of them, the black and whiteness of that, and if it's cost effective for homeowners. One is, do I have to refinance with my current lender?
No, not at all. You can choose any lender that you would like. it's definitely encouraged to make sure that you can. I know that from what I've heard, a lot of the bigger banks out there are having pretty large capacity issues. In other words, they're kind of at max capacity for how many clients they already have in the pipeline. So we saw a record surge in refinance applications over the last 1 to 2 months, just because rates did drop, and we saw a lot of people jump on the opportunity to take advantage of it and lock in that low rate and refinance. And as a result, we're seeing a lot of banks that are delayed quite a bit with those turn times and getting them underwritten and closed. We've heard some banks quoting 90 to 120 days to close a loan or something, when usually it's a lot shorter of a period. Where we as a local lender, we're still turning around loans very quickly. We have them underwritten and ready to close usually in about 3 weeks. So we make it as seamless as possible. And really the only thing that's a little delayed right now from our end is appraisers. Appraisers are really busy, and there's also a lot of complications as far as gaining access to the property. Some people don't feel comfortable with an appraiser coming in their house right now. And so there's been some alternatives to that. In certain cases, we allow drive-by appraisals. Sometimes it's a desktop review. And sometimes we actually allow an appraisal waiver completely if we receive one through our automated underwriting system. So that's helped ease that burden a little bit. But I do know that appraisers are very, very busy right now between their normal purchase workload and a huge influx of refinances.
Well, okay. And then I had a pretty specific question. I'm not sure if you work in commercial loans or not. They were asking your opinion on current commercial refi rates compared to SBA relief loan.
So I am not a commercial lender, unfortunately. I'd be more than happy to connect you with a few of the people I know in that field that could be more than willing to help out and answer those questions. I know a few great guys that work there.
Yeah, awesome. Definitely do that info. Doreen, did you have anything to add?
Okay, so just now you were talking about right now the closing time is taking longer because of the crisis situation. So if I have a buyer want to make an offer right now, you will suggest how long is the closing time for us to put it on the contract?
Well, I think the best piece of advice for that, especially in purchase business, I had a client just this weekend put their home on the market to sell it, and they received over 10 offers in the first weekend on the market. So there's still a lot of people there's still a lot of demand for housing out there. So right now, I'd say the key is use a local lender, someone that has in-house underwriting, a local network of appraisers that they work with that can accommodate a competitive close time. Because like I said, we are still closing loans in 3 to 4 weeks on average. We haven't seen much of a delay in our times at all, but a lot of the big banks have, and a lot of the out-of-state online lenders have. So as a result, for us, we ask for 30 days on a contract just to be safe, but we're usually done way ahead of schedule. If it's a matter of making their offer more competitive, we're very comfortable closing quicker than that. But on average, 30 days is more than enough time for us.
Okay, even for crisis time like this.
Even this, yeah.
Wow, amazing. Okay, good. So just now, probably because of the internet connections, you probably did not hear me well. So my question is, how long does it takes to complete the process time for doing the refinance loan? Is it like still 30 days good to refinance loan?
It's about the same. What we notice is there's not much urgency with it. People already have a roof over their head. There's no contract in place that says you have to close by this date. Yes. So there's not that rushed feeling of, hey, we need to provide all of your tax returns and bank statements and everything like that as quickly as possible. But that being said, I mean, it's a pretty efficient process. It's still about the same. It just depends on how quickly the borrower provides their documents needed to us and how quickly we get the appraisal back. Those are usually the two main factors there. But our company is a purchase lender first. Like we make that a priority. It's something I think we're about 80% purchase, 20% refinance, whereas the rest of the industry is a little bit, especially right now, much higher on that refinance scale. And we do that on purpose. Like we work specifically with local real estate agents and builders. So we make it a priority that purchases will always take precedence over refinances.
Okay.
We're not, if there's files in line to be underwritten, we're going to underwrite the purchase files first because they have a legal contract deadline to get into that home.
Mhm.
Whereas the refinance, they already have a roof over their head. I mean, we have a date in mind on when we want to close them, but it's not, there's no legal contract on when it has to close.
Mhm. Okay. So something related to refinance loan. Can you explain to us a little bit what's the difference between refinance or cash out?
Yeah, so a rate and term refinance is essentially all you're doing is you're taking out a new mortgage to pay off your existing mortgage and just change the terms of it. So typically what we will look at doing is the most common one is a 30-year fixed loan where you drop your interest rate and as a result you save money on your monthly payment. So a lot of times if we see a $300,000 loan and they're dropping their loan 1%, their loan interest rate by 1%, they're probably going to be saving close to $200 a month. So that's a decent rule of thumb in that area. And then what we do is we pay off the mortgage, and then you can also make the new loan amount higher to roll in the closing costs and then the prepaids for their escrow account. So the idea is to do it with no money out of pocket for the client. And then that's what we say, like we roll in those closing costs and then you factor in how much you saving compared to what you're rolling into the new loan. Whereas a cash out loan is you rolling in the closing costs and prepaid just like that refinance, but you're taking additional equity out to actually get cash put in your pocket at closing. So Texas is actually the only state in the country that has a law where you cannot cash out above 80% of the value of your property. So in other words, when we get that appraisal done, the max loan amount on a cash out loan is 80% of the appraised value. So you actually have to have a good amount of equity in the home before you can even consider doing a cash out refinance. Whereas if you're just doing a rate and term, a lot of times you can go up to 95, 97% of the appraised value.
Okay, so can cash out, can I do both? Can I do cash out on the properties like primary residence and investment properties? I can all do cash out?
Yes, the investment property, it has a maximum loan to value of 75% instead of 80. And the interest rate's a good amount higher as well. So because there's a little bit more risk on an investment property compared to a primary residence.
Okay. Yep. Okay. I want to bring up another question that is I heard from some other clients discussions. So with the current, like you were talking about job situations, the income change, and the crisis situation. Do you feel like right now the home buyers, they need to, in order to be qualified for their loan, their credit score need to be higher compared before? I think you guys can do lower credit scores. And what's the credit score that you guys feel more comfortable that people can get a loan?
Yeah, that's absolutely true. We've seen pretty much every institution out there raise their minimum credit score. The majority of them were at about 580 is the minimum credit score for government loans. So FHA, VA loans, and USDA as well. We've seen lenders raise them anywhere from to 620 all the way up to 680. Depending on
all the way up to 680. So
it's like minimum credit score. Yeah. So ours is at 6.
Oh wow.
Ours is at 640 right now.
Okay.
The thing is that the investors that purchase those FHA and VA loans, they're looking at those lower credit score loans as higher risk, and so they're increasing the pricing on them. The rates are higher than usual compared to what they were 2 months ago, and there's a lot of change like that. Chase Bank actually rolled out a news release late last week that said that their minimum credit score going forward will be 700 on all loans.
Wow.
And I think
I'll talk to Didi. Don't spend any more money.
So, yeah, I mean, I think it's more just to control the capacity issues that I mentioned earlier. They just have too many clients in the pipeline. They're trying to take care of their current client base. I don't think it's a permanent change. I think it's short term, but I could be wrong. I mean, it obviously depends on how long the shelter in place orders stay in place and how everything plays out with the virus. It could take, it could be a few weeks, could be a few months, who knows? So it's hard to predict. But yeah, that's the thing just to keep in mind, is that guidelines are changing a lot, frequently, without warning. So that's another good reason to be working with a local lender that has, you know, a few different options and is paying attention to those changes. So it is uncharted waters we're seeing here, and people are kind of making adjustments on the fly as we go. One of the biggest things that we've seen affected mortgage-wise is jumbo loans. The majority of investors that offer jumbo loans have completely removed themselves from that market. We're seeing very few options for jumbo lending, whereas a month ago, there were countless people that were offering those loans. They were offering non-QM loans, like unique products for self-employed people, where you use 12 months of bank statements to calculate income. Those products are just gone. Anything that's riskier is investors are kind of taken off the shelf, basically.
Okay. Back to your question about a jumbo loan. Can you talk to us about what is jumbo loan? What's the price? What's the loan amount minimum?
A jumbo loan is any loan that's over $510,400. So 510, 400 is the conforming loan limit. Anything above that is considered a jumbo loan. So there's just a lot fewer options, but there are still second mortgages available. So as an example, if you are buying $1 million home, you can use a first mortgage of $510,000 and a second mortgage of $300,000, and you're not a jumbo loan.
Okay, I see. So instead of doing one big jumbo, like higher amount of loan amount, then you're going to do first loan and second loan.
Exactly. That's exactly right.
That's good to know.
Yeah. So there's still options for those higher price points, but the once you get above $1 million, the options are pretty limited, unfortunately. It's mostly just private portfolio lenders that are offering certain products. We're seeing a lot of those products offer a little bit better pricing on adjustable rate mortgages, which have their place in some cases. I try to typically steer clear of those, especially when fixed rates are as low as they are right now. So, but it depends on the client.
Okay, I see. Okay. Okay, those are good because we are going to have a luxury home coming up close to $1 million. So I was just talking to my seller about, you know, the how is the market and how is the mortgage currently. So it's good to know about, you know, the situations about jumbo loans for luxury market.
Yeah, those can be, and those can change in a hurry. So just whatever ends up happening with that particular house, just make sure that the lender is on top of it and knows what the guidelines are currently and is ready to make a quick change if something unforeseen happens.
Okay, those are great. Thank you, Nick. Any other special programs that your company currently have might be good for some home buyers or some, you know, some people that are shopping around for their rates?
Yeah, definitely. So the for first-time home buyers, there's still a lot of great programs available. So there's down payment assistance available through several different agencies in the state of Texas, and tax credit programs to where you can get a portion of the interest that you pay back to you on your tax return. So there are some great programs available. There are household income limits needed to qualify for these programs. So you can't make over a certain amount of money. But the rates on those programs
Is there a number that you can roughly tell us?
There's like 9 different programs, so that they range from like 86,000 to about 108,000. So if you're above that, usually
it's a combined income.
Combined household income, exactly. So if you're above that, you won't be able to qualify for the down payment assistance typically. So, but it's case by case. It's determined by county, determined by family size. There's a lot of stuff that goes into it.
Okay.
But yeah, some of those programs are fantastic and the rates are great. You know, I was looking at the Texas Department of Housing and Community Affairs and Texas State Affordable Housing Commission. We call it TSHAC. You can get 3% of your loan amount as a grant to go towards your down payment. And as of today, the current 30-year fixed rate on that program is 3.25%.
Oh, that's a good rate.
Fixed FHA or VA or USDA loan. So there's still some terrific programs out there for first-time buyers. You know, those agencies seem to be very committed to continuing to offer them through this time. So, yeah, as of right now, those are still going forward as planned, which has helped offset a little bit some of those credit score requirements and the effects to the rates that we've seen. So there's definitely some great programs still out there. So it's just important to work with a trusted advisor that can educate you on all your options.
Okay, those are very good information. Yep. For the current situation right now, different options or what need to watch out or be cautious here and there. I would say, for any person who are interested in buying a house right now, definitely, just like talk to your lender again or reach out to Nick or some of your own preferred lenders. Just really check out what's current changes, or can you still qualify, or can you still afford to buy the current homes. Like before, maybe you can buy a luxury close to $1 million home, but right now, since some of the criteria has changed, maybe be a little bit more cautious, like with the price range that you are going to get into offer or get into contract with.
Exactly.
Yep. Okay. Carrie, any questions?
I think I've got what I need.
Okay, good. Thank you so much, Nick, for spending time with us today.
Thanks for having me.
Okay, so Nick, later on we're going to put your contact info up so people will, if they're interested to know more about information or have any questions, they will be okay to reach you, okay?
That'd be perfect. Thanks so much.
Okay, thank you. Thank you, everybody.
Have a
Okay,
nice day.
bye.
Man.